Ooh, how's it going, folks? Today is the day that we gotta say, the UVXY went up like crazy today. So I'm gonna just say right now, I'm extremely excited, and I'll tell you why. One, I have a decent stake in the UVXY, and if the market continues to crash the way it's crashing, I'm a rich dude. That's all there is to it. But if it doesn't, it doesn't matter, because I periodically sell off my UVXY as it continues to go up just a little bit. I sell a share here, I sell a share there. The UVXY is honestly an insurance policy. The UVXY stocks that I own, the shares I should say, the shares I own of the UVXY are really an insurance policy for the puts I own, the long-term puts I own on the UVXY. So I have been able to effectively play both sides. This is like leverage beyond leverage could ever imagine. So no matter what happens in the market, I'm always protected. And this is the best way to play the market. And a lot of people think it's a little arrogant of me to say that my way is the best, but it's true. If it works, it works. So what I'm trying to get at, what I'm trying to say is that I'm loving this. The UVXY, I basically average down, I guess you could say. I continually to buy lower and lower and lower, right, as it continues to lower down in value. Mainly because I want to have as many shares as I can as it continues to dip. So that way, if a market crash happens and it's really crazy, I will be super duper protected during that time frame. I think we should consider, though, that the market is at its peak, and honestly, a crash may be inevitable, and we may have to face this possibility. One of the reasons I prefer to play the UVXY overall is because it's a leveraged ETF. And what leveraged ETFs really are, in a nutshell, is they do a lot of the inverse of what it's tracking. So I guess, for example, the UVXY technically tracks the S&P 500, right? And so since it tracks the S&P 500, it's meant to do the inverse. So what happens is they have future contracts that basically bet against the S&P 500, and they're about a month or 2 months expiration date. So they're very short-term contracts. These contracts expire pretty quickly. So the whole point of having a leveraged ETF is to kind of protect your position and protect yourself. And it's the best way to protect yourself in the markets, because look, markets are always going to go up and down. But if you play the volatility effectively, you're always going to find a way to protect your ass in any sort of situation. It's in my opinion one of the best ways to go, and it's helped me out quite a bit. Now, it takes a while to establish that position where you're betting against and you're betting for the market to succeed, because you have to play this very peculiarly, but not peculiarly. You have to play this very strategically, I guess you could say. So the beauty is, if a market crash, a really bad market crash were to happen tomorrow, like maybe a 10% market crash, I would definitely have a lot of money in the bank. That's for sure. I would have a lot of gains. It depends on the severity of the crash. You know, honestly, if the market crashes really, really heavily, those future contracts. So the funny thing about the future contracts is those multiply, right? So let's say those future contracts, those become worth a lot of money. Future contracts, especially when they fall in the money. Whew. So it ends up being a big deal if the UVXY, it becomes a big deal if the S&P 500 crashes, because people like me who actually have shares in the UVXY end up turning a huge profit if a major market crash ends up happening. So if we see a 10% decline, if we see like a 1% decline on the daily for the S&P 500, man, we're just going to continue to see more of the UVXY trades. These UVXY, leveraged ETFs go up and up and up in value. The beauty is, the only thing that sucks is it does slightly take away from my put contracts in value, but honestly, if the market is going to continue to go on a downward slope and continue to enter a possible bear market, which may happen, by the way, there's a lot of fear right now. So I kind of figured there was going to be eventual fear. The market is unbelievably high, in my opinion, for no reason. The only reason I could think of for the market being even remotely high as far as the value goes is just a lot of people don't want to save cash anymore, and they realize that cash is so trashy you don't even want to have anything to do with cash. So people are starting to flee saving money. Instead of saving money, they're going for gold, they're going for silver, they're going for Bitcoin, Ethereum, whatever you can. They're just basically, they realize the dollar isn't worth anything. And it's smart of people to do this. It really is smart. Oh man, I don't know at this point. The crypto markets are kind of going insane. I will say, what do you call it? The Shiba Inu coin, for instance, went up quite a bit. I've been swing trading it, just kind of selling as it goes higher, buying as it goes lower. I basically have lowered my average cost quite a bit with the Shiba Inu coin, so I'm very excited about it. The more profit I get, the better. You know, I want to be the infinite player, and the best way to be the infinite player is buy low, buy when things look like shit for decent assets. Now, I'm not saying Shiba Inu is a good asset. It's not. But I got all my principal back, so at this point, I can play Shiba Inu any way I want. I could play it like the way I play the slot machines over at the casino. But this time, in the crypto market at least, I'm playing with house money. That's the point. And when you're playing with house money, I mean, anything goes. Anything goes. So it's always good to play with house money when you can. I just think that there's not enough people playing with house money, man. You got to find a way to get your principal back at some point. No, sometimes it requires a long-term hold. But I got lucky. You know, I get lucky with some of these crypto bets. Some of them end up being duds, but I don't really put a lot of money to begin with in some of these crypto bets, so it's really not a big deal. But the market cap for the crypto market is insane. I really do think that the market capitalization is insane for crypto. Like, I know Bitcoin's about $1 trillion market cap. I think it fell under, or it may have gone back over, one or the other. But Bitcoin's like $1 trillion market cap. I think Ethereum's eventually going to get $1 trillion market cap. It's all insanity. But I am a big fan of Ethereum. I do think it's probably the future of blockchain technology, and I think owning a piece of it's a good idea. I own a little bit of Ethereum. Not much, but a little bit. Honestly, anything that's in the decentralized currency space is pretty much something you want to get your hands on. You want to get your grumpy hands on that shit, man. So, I don't know. The way I look at the markets, UVXY is definitely my main market play. It's definitely the play I want to make sure I'm exposed to. And it's really the way to go. I mean, if you have ownership of this, you're basically, in a weird way, you're owning futures contracts that bet against the market. It's really cool. You're a part owner in those. So if those futures do really well, right? Like, let's say the S&P keeps crashing, right? Today it crashed like 1.4 something percent. I can't remember the exact percentage. But let's say tomorrow it crashes another 1%. Maybe it crashes even further, even worse than what happened today. Hell, we might even see a 7% dip. And if we see a 7% dip, you know how insane that would be? That'd be insanity. I'll tell you what, though, my UVXY position would be climbing to the heavens, essentially. But I would also be intelligent enough to sell what I got, too. I don't want to hold too much of the UVXY when it continues to go up, because eventually the market does correct back to the way it should. It usually ends up going on the growing trajectory. But yeah, I think owning the S&P 500 is not too risky because you are diversified across at least 11 sectors of the overall stock market. Owning the S&P 500, so it makes sense to me because you're getting exposure, getting good exposure to the markets. So it's a balancing act. So diversification is your best, is your best instrument in protecting yourself against volatility, at least major volatility. So I want to see people protect themselves a little bit more, and I hope people do. It's important. It really is important that everybody protects themselves to the best of their ability. But yeah, it's an exciting time right now, man. Exciting times to see what's happening. But yeah, I think with the market crash that happened today, that was really good for me, at least. It's not good for anybody who has a lot of their money. If you're using margin to invest in the stock market, that's a bad call. I would recommend doing this though. If you do have margin and you barely have any of your own money in the markets, you don't want to borrow that much money, because if you borrow too much money and things go down pretty rapidly, you might get a margin call. You don't want to get a margin call. You want to avoid a margin call at all costs. I had one back in the day when I first started investing with margin. Never happened again. I started being very smart about how I played margin and how I did things. So it's really how it worked in the end. But yeah, ultimately, I just want to see people play the markets intelligently. It's possible to still make a lot of money out there, you know. So don't give up just yet, everybody. You're seriously on the right track. Just don't play on margin. My buddy Nathan recently asked me about if margin was a good idea to play with, and I say try to avoid it if you can. But if you happen to have no money in your account at the moment and you want to play and you want to look for great deals in the market, yeah, why not? If you want to buy the S&P 500 on a 1.5% dip, that is the best way to do it. What's funny is everybody's looking at these stock market crashes as like the worst thing in the world. It's a buying opportunity if you're a savvy investor. I want to teach all you rookies, if there's any rookies out there, that the best thing you could do is buy the S&P 500 when it dips. And then, hey, guess what? If it dips again, buy more of it. The only thing you're doing when you buy more is you're just lowering your average cost. And when you lower your average cost, when it goes back up, it's going to jump over the average cost and you'll turn what's called a sweet little profit, baby. But no, I think being exposed to the market's great. I don't believe in timing the market, oddly enough. I really don't time the market at all. I play with leveraged ETFs a lot, and I basically just play both sides of a leveraged ETF because volatility, I think volatility is king. Volatility is the way I make most of my money. If it wasn't for volatility, I'd be a boring ass dividend investor or something. No, I don't know. That's the way I look at it. But yeah, I'm having a good time with all this. I think at the end of the day, the market will continue to probably eventually go back up. You know, give it about a week. We might actually be in a bear market for even a month. Who knows? If enough crazy stuff happens, let's say institutional investors may start selling off. You know, did you know that really, I think it's what was it? I want to say it's like 1% or 2% of people own about 90% of the stocks in the stock market, straight up. Isn't that crazy? Like, that's so insane to think about. So a retail investor is actually, even though we're the majority in the markets, we're when it comes to our ownership, we're technically the minority. All of us collectively as retail investors own about 10% of the market. That's insane. That's an insane statistic. Whereas institutional investors hold 90% total, right? And that's like the 1 to 2% of people. There's not a lot of people who, it's a very select few who own like 90% of the market. It's crazy. That's why you got to play both sides, because it is technically those institutional investors who are holding the key to the prosperity, oddly enough. And a lot of these people are surprisingly buy and hold people. The difference between a rich person and a poor and a middle class person is honestly the rich constantly invest in assets. I've known a few rich people. I've talked to a few of them. They're not very materialistic. They just love playing the game. They love being an investor. They love being a business owner. They love innovating and helping people. Rich people aren't that bad. I think movies and popular culture likes to make rich people out to be like terrible people. The ones I've met have all been pretty decent. Now, look, just because you're rich doesn't mean you're a good person. There are plenty of rich, terrible people, but there's also plenty of rich, incredible people. Money is like alcohol. It doesn't make you a better or worse person. It just brings out more of who you really are. And the more money I make, the more I realize I want to give my advice, and I want to be raunchy, and I want to have fun, but really at the end of the day, I want to help people. That's my goal. So it's the reason I make this entire show to begin with. So trying to think if there's anything else I want to add. But I can't think of anything at the moment. So what I want to recommend everybody is, when the stock market dips, it's a buying opportunity. Always keep this in mind. Please keep this in mind, everybody. It's a buying opportunity. It's never an opportunity to sell. It's okay to keep 20%. So 20% of your portfolio needs to be in cash, in my opinion, and the rest in other assets, because you do want to keep cash on hand to buy like S&P 500 index funds on the dip. You want to just be smart about this. So you want to be as smart as you can. And I honestly believe it's the best way to go, to be exposed to the S&P 500, you name it. Anyway, I want to thank you guys for taking the time to view this video. Just do me a favor. Stay safe, stay sexy, stay healthy. I'll try to do another video tonight. I might go for a walk. I'm feeling antsy, man. I'm antsy. I'm feeling very like, yeah, I've been cooped up inside. I need to go get some cold air. But I do want to thank you guys once again. Have fun, and remember, play both sides of the market, and you won't be as stressed out. Trust me. If you find a way to do it, I might share more of my little secrets on how to do it. It's really not hard. It just takes time. And the problem is, the reason I don't teach it to a lot of people is not a lot of people are patient. It requires a form of patience that most people don't have, and I do. So, and I don't spend any money, so I got a lot of free money I can utilize at any time to just invest. So that's the beauty about being a minimalist, man. You can play the game, get more cash to play the game, more leverage. Yeah. All right, but thank you guys once again. Have an incredible rest of the night, and hopefully I'll do another show probably tonight. Anyway, later, guys. Maybe I'll do one maybe in 5 minutes. Who knows? Depends on how I feel.